Today, we're looking at Constellium, a global giant in the aluminum business. You know, they make the high-tech stuff that goes into everything from the cans you drink from to the planes you fly in and the cars you drive. And like a lot of big industrial players, they've been trying to find their way through a pretty tricky market lately.
But here's where it gets interesting. Their story just took a wild turn. They went from putting up good, solid, respectable numbers to, well, absolutely smashing records. So the big question is, how'd they do it? What suddenly kicked into high gear to cause this massive surge?
Okay, so before we dive into the numbers, we need to get one term straight. Adjusted EBITDA. I know, it sounds super complicated, but don't worry about it. Just think of it as a company's pure, core profit from its actual operations. It strips out all the financial noise, like interest and taxes, so we can get a really clean look at how the business is actually doing. It's how you compare apples to apples.
All right, let's set the stage. We'll call this Act 1, the foundation. We're going to rewind a little bit to the third quarter of 2025. The performance here was strong for sure, but it definitely wasn't a walk in the park.
So, the number for Q3 was $235 million in Adjusted EBITDA. That's a solid number, no doubt. But the really telling part is the backstory. They pulled this off even with what they called an uncertain macroeconomic environment and demand weakness. So the big takeaway here is that they were already performing really well even when things were tough.
And that brings us to Act 2, the breakout. Because if Q3 was the solid opening act, the fourth quarter was the show-stopping headliner. This is where the entire story just flips.
And just look at this number. This really puts the scale of that shift into perspective. A 113% jump in their core profit compared to the year before. Let me say that again. 113%. That isn't just a little bit better. That's a whole new ballgame.
So let's look at the incredible numbers behind that turnaround. Revenue shot up to $2.2 billion. And get this, look at the net income. They went from losing $47 million the previous year to making a $113 million profit. Their Adjusted EBITDA was a new Q4 record, and they turned into an absolute cash-generating machine.
Okay, so we've seen what happened. An absolutely incredible, record-shattering quarter. Now it's time to find out why. Welcome to Act 3, the engine room. We're going to pop the hood and see exactly which part of the business was firing on all cylinders.
And wow, this table right here, it tells the whole story. You've got their three main business units. Now, look at the middle one, Aerospace and Transportation. It was solid but dipped a tiny bit. Then, look at the bottom row, Automotive Structures Industry. Yikes, it basically fell off a cliff. But then, look at that top row, the packaging division. It absolutely exploded, jumping from $82 million to $136 million.
It's really no wonder the company itself called it a record-breaking quarter for this specific division. This was the undisputed hero of Q4. The packaging and automotive segment wasn't just pulling its own weight, it was pretty much carrying the entire company on its back.
So what was fueling that hero division? It all came down to one thing: packaging. Shipments for things like aluminum beverage cans just soared, up a huge 15%. And that incredible growth completely papered over the weakness they were seeing on the automotive side, which was actually down.
And you can see that weakness in the auto sector even more clearly when you look at their other auto-focused segment. It really was a tale of two completely different markets. Demand for their industrial products was booming, but the demand from their auto clients just tanked, which totally crushed that segment's profits. It just goes to show how massively important that boom in packaging really was.
So after a year that ended on such an insane high note, you have to ask, where does a company like Constellium go from here? Well, let's get to our conclusion and check out the roadmap for the future. Yeah, it's no surprise that management is feeling pretty good. For the full year 2026, they're aiming for an Adjusted EBITDA somewhere between $780 and $820 million. And they expect to bring in over $200 million in free cash flow. So they clearly think this momentum is going to continue. But there's a catch, of course. This all assumes the economy in general stays pretty stable.
And they're not stopping there. They're thinking even bigger. They've rolled out this long-term strategy called Vision 2028. You can see the path they've laid out. That record Q4 in 2025, that's the launching pad. The next major step is to hit that 2026 cash flow target. And the ultimate prize is to grow their core profit to a whopping $900 million by the year 2028. And that really brings us to the final big question. This whole story has been about a fascinating tug-of-war inside one company.
You've got these huge tailwinds from packaging and aerospace pushing them forward, but at the same time, you have this clear headwind from a shaky auto market pulling them back. So, the question for their Vision 2028 plan is pretty simple. Can the strong parts of the business keep overpowering the weaker ones if the auto market hits more bumps in the road?